Hey everyone, welcome back to Corporate Decoder, the place where we sift through the boring business filings so you don't have to. Today we're cracking open biote Corp's latest 10Q. Get ready for a deep dive because this report is more than meets the eye. It's a roller coaster of hormonal happiness and financial. Well, we'll see. This report reveals some interesting trends. Revenue is up, but so are certain expenses. We'll explore if this company focused on hormone replacement therapy is truly thriving or just masking some underlying problems. Are they cooking or being cooked? Before we get started, if you find this breakdown useful, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us and share your opinion. biote Corp, based in Irving, Texas, is all about training healthcare professionals on hormone optimization. Mainly through bioidentical hormone replacement pellet therapy. Think of it as a masterclass for doctors who want to help people balance their hormones. This financial snapshot covers the first 3 months of 2025, ending in March. It's a quick look under the hood to see how the company is doing. Let's dive into the numbers. Biote's condensed consolidated balance sheets shows that cash and cash equivalents increased a bit to $41.7 million, while inventory, a measure of how much product they have on hand, decreased slightly from $14.8 million down to $13.4 million. So far, things are pretty stable. On the other side of the balance sheet, the liabilities, that's the debts they owe, tell a different story. Total current liabilities, what they need to pay in the short term, decreased, but share repurchase liabilities, which is the money they owe for buying back their own stock, is a big number, which might be something to keep an eye on. Turning to the income statement, revenue is up. Let's see if that's a good thing by scrolling to see the condensed consolidated statement of operations. Product revenue accounts for the bulk of it, raking in $47 million. Service revenue comes in at just under $2 million increase from the same period last year. Of course, it takes money to make money, and the costs tell their own story. Cost of products came in at $11.7 million. The cost of services, meanwhile, is under $1 million, so services is probably their profit area. But selling, general, and administrative expenses ballooned to $26.7 million. That's a big jump from the previous year, and what cut their profits? Interest expense did take almost $3 million, and that brings us to the bottom line, a net income of $15.8 million compared to a $5.7 million loss from the same period last year. Basic net income per share is 0.44, showing they are making some profit per share. It's important to note the weighted average number of diluted shares outstanding, around 37 million. This number weighted adjusts for any stock dilution during this period. The statement of cash flows reveals cash from operating activities coming in at $6.5 million. On the other hand, they spent almost $2 million on property and equipment. Repayments on the term loan accounted for a cash outflow of $1.6 million. Now, let's talk about the risks. Every 10Q comes with a cautionary note regarding forward-looking statements. Basically, the company is saying, hey, don't take everything in this report as a promise for the future. They specifically point out reliance on third parties to manufacture hormones, regulatory issues, competition, and protecting their intellectual property as things to watch out for. Also, they mention their ongoing legal proceedings, so let's see what those are about. First up, a suit with Right Value drugstores alleging breach of contract fraud, the works. Biote ended up paying Right Value $3.5 million, with another $1.5 million to come. It's never great to see lawsuits, even if they are settled and done. Next, there's a lawsuit from some trusts alleging breaches of fiduciary duties. Fortunately, a lower court ruled to dismiss the case, but it's now on appeal in Delaware Supreme Court. Legal battles are always costly, even if you win. Moving on from lawsuits, a big part of these financial reports are exhibits, but there's nothing particularly interesting here. Lots of nons and we're not applicable in there, and you don't have time to read about a lot of legal formalities. Let's talk about recent changes to reporting requirements. They did adopt ASU 2023-07, which is a fancy way of saying they're providing more details about their different business segments. In this case, this did not affect the report. They also tell you about their accounting policies and how they define certain elements such as other current assets. So what's the big picture? Biote is bringing in more revenue, but the increase in selling, general and administrative costs drag down profits. while they did reverse their 2024 loss, they have a lot to improve upon. The legal battles are an ongoing concern, and anything that has to be settled definitely does not help. From a business perspective, biote is trying to lock down its supply chain through these acquisitions. The main question mark is if they can continue to expand their reach to medical professionals, control costs, and navigate the legal challenges. Ultimately, with a bit of careful planning, biote Corp could really see their future financials improve. Alright, that's our breakdown of biote Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.